All right, I'd like to welcome our speaker, Emily Rogan of United Policyholders, a nonprofit information resource. Emily is a senior program officer with the organization. She's been with them since 2008. So welcome, Emily.
All right, thank you so much. So if you can allow me to share my screen, I have a short slide deck here. Just a big thank you for everyone who's coming out tonight and watching this at home. It might not be the most exciting topic for most. However, it's a really important piece we have here. So I call this presentation Tips from the Trenches. And I'll talk a little bit more about why we call them tips from the trenches, why we call our preparedness information. You're going to come away with some preparedness action steps, but a little bit about myself. As was stated in the introduction, I'm Emily Rogan with the nonprofit organization United Policyholders. I've been with the organization for over 12 years now, and I have a lot of interest in preparedness. I have served on different boards both in California for our voluntary organizations active in disaster, which help nonprofits communicate before and after disasters, and also with the California Department of Insurance curriculum board around insurance. So as we go on, the most important thing that I want you to know about our organization is that we are a nonprofit. We do not take any money from insurance companies. So our mission is to be a voice and an information resource for insurance consumers. Last year, we celebrated our 30th year doing this. We are supported by donations and from individuals and businesses, and then also foundation grants. We like to say too that we're fueled by volunteers. We're the small organization that helps people after disasters and beforehand prepare for disasters, but really we're a pretty small organization with a really large mission to help everybody who has insurance if they need to use it. And we get a lot of that done through our National Volunteer Corps. We are a trusted voice for insurance consumers in the media as well. So in New Jersey, we were there after Superstorm Sandy. We did a recovery effort for 2 years there through our Roadmap to Recovery program. And we helped people navigate this storm that was both a little bit of water coming from above, so a little bit of homeowners issues there, but then a lot of flood insurance. That was the main source of money that people really needed to get flowing in that time. So again, I mentioned our Roadmap to Recovery program, which is our largest program, helping people after disasters. And then this preparedness program helps people prepare and shop wisely. So a lot of it is what people wish they would have known about insurance, and what they can do now in peacetime to really make sure that their biggest asset, their home, is properly covered. And then we also have an advocacy and action program, which helps give a voice to consumers, in both the courts of law and public policy forums, in the legislature and in the media. It's a really important one because when you think about insurance companies, they have a very large lobby. But the people who have insurance, oftentimes our voice isn't represented in these arenas, and so we are able to see how something, whether it is a case law that will be created or a bill, will really affect the people. So that's where we weigh in, and we did a lot of advocacy work after Superstorm Sandy, trying to fix flood insurance. They have it was a very boxed in process, and after disasters, what people really need is flexibility, and they need those dollars to flow. So we call our preparedness tips from the trenches. It's what we've learned after disasters. And, we're bringing it to you of what people wish they would have known. And the main thing we want people to know is that when we're talking about these large natural disasters, it's really insurance money, not charitable or government aid. That's the #1 source of money that helps people rebuild their homes and get back home after a disaster. We hear a lot, this applies to both flooding and, we have wildfires in California, we have earthquakes, and, there's oftentimes at preparedness fairs, when people are really just there to see the fire trucks, they'll say, oh, your FEMA will be there. And, FEMA assistance, really the maximum you can get is about $35,000 to help rebuild your home. And, after these big disasters, if you have a lot of damage, that's not enough. It's also needs-based. So, if you have income, if you have some sort of means, you wouldn't qualify for that. And so, FEMA won't always be there to help out. It's, it has a wonderful mission, but it's not to really just wave a magic wand after disasters. SBA loans, Small Business Administration loans, they also have a program after disasters, but you have to qualify for them and they must be repaid. And then again, charitable aid really covers basic or emergency needs after disasters and not the cost of rebuilding a home. So most preparedness messages that we hear really are around make a plan, register for alerts, make a go bag, or some sort of kit, to if you need to shelter in place, which I think a lot of us were, got a little bit too comfortable with earlier. We know how to do that now. But that's kind of where the preparedness message seems to end in a lot of ways. And what we want to do is take it a little bit further and have some preparedness action steps in here that are more than just make a kit and make a plan. We want people to be prepared for the recovery, not just the actual disaster. So one thing we want you to do, this year when you're going to get prepared is store your important documents offsite. That includes your insurance documents. Take some time, and we all have that big stack of financial papers that are on a desk, not necessarily in the proper file, but they're there and you kind of know where they are. Dust them off, and we want you to take a look at them. We're going to show you how to do an insurance checkup this evening, but make sure that while you're looking at them, to store your important documents offsite, and that is easier these days than it has been 10 years ago when we were doing Superstorm Sandy, because we all have iPhones, we have cameras. You can take a picture of it and send it to the cloud, or you can take a picture of it and email it to yourself. But just when you have these important documents and they're just in your home, when we're talking about getting prepared to recover, you're going to need copies of these, and there will be ways to replace them. But having access to them will help the application process for a lot of things, and other bits go a little more smoothly. So store your important documents offsite, and then also make a plan for your photos and important memorabilia. That's one of the biggest things that disaster survivors wish they had done in this process is, those are the things that are irreplaceable. And then speaking of, inventorying and records, we want you to inventory your stuff, create a home inventory. Now, unfortunately, my closet does not look like this. It is incredibly cluttered. It's hard to find stuff. There are things on the floor. There are things, in the back, lots of things. So it's actually really hard to remember everything that you had. And that's another piece that disaster survivors wish they had. They want a home inventory. That means, whether it's a video or pictures, whatever it may be, you can do it yourself, but just make sure there's some record of what you had, because in the insurance claim process, you have to write down everything that you had, which is really hard, especially when we're talking about total losses, or if, a whole area of your house has, whether we're talking about a house fire or a flood, it's just, it becomes very difficult to see what you had. And really, you'll take pictures of your debris, but you don't want to be scrolling through those pictures. It's really difficult to make up or down. And it's important to remember that in that time, you will have also gone through something kind of traumatic of losing your home or having a lot, your home significantly damaged. So one thing you can do now is to create a home inventory. And I mentioned sending it to the cloud earlier. One thing I want to make sure you do with your home inventory and, the documents that you're going to scan is save them in a place that you know how to access. So if you don't know what the cloud is, don't save it in the cloud, because when you're trying to get it back and you need to find, your inventory, and you don't know what if it was sent to this email or that email, just think about it. And what does that mean for you to be able to save it somewhere offsite that you'll be able to access if you need it? And if that means, printing out pictures and sending it to your sister who lives in another state, then maybe that's the best choice for you. But if you don't trust your sister to keep it in a safe place, don't send it to her. Send it, just figure out what for your specific situation makes the most sense to have documents of your belongings and being able to access it. All right, now we're going to get into the meat of it. The next thing that we want you to do will be an insurance checkup. And that is to contact your insurance agent and make sure that you have enough insurance. And we're going to be getting through, what that means. When we talk about insurance, a lot of times the devil and the dollars are in the details. And with insurance, it's all fine print. So one thing that we know is really important after natural disasters is having the right kind and right amount of insurance. We're talking about what it would cost to rebuild your home or, make these significant repairs. And that number can be significantly different than your real estate number or how much is on your loan. So getting a good, getting your mind around, what it would cost to rebuild your home or repair your home is a really important piece of that. And then when you're pulling out your declarations page, which we'll get into, you're going to see if you have enough insurance to be able to do that. We're talking about construction places, right? We also want you to know that every policy, when we're talking about home insurance, has different terms and different language. So I'm not going to be going really deep on this is what, and this is exactly what it would say in your insurance policy, because different insurance companies have different language. So my insurance policy might look different than yours, even if we lived on the same block. And the importance of this is because after disasters, we see two significant types of problems. People either have coverage problems, which means they don't have the right kind or right amount of insurance, or claims problems, where the claims process is extremely difficult and they don't feel like they're getting the money they need in a timely manner to get it going. So claims problems can often be solved by being the squeaky wheel, by putting everything in writing, by really treating your insurance claim as a business negotiation. But coverage problems, if you just don't have the coverage, that is a really tough situation to be in, especially if you have some coverage but are underinsured. And really, that's the biggest problem that we see is underinsurance. In fact, time and time again, no matter what type of disaster we're talking about, we see that about 2/3 of disaster survivors are underinsured, and the amount is typically in the six figures. Right now, we are tabulating 2 surveys in California one in California, one in Colorado for the recent wildfires. And we're talking about the 20 people who lost their home in the 2020 wildfires. And in both states, both California and Colorado, the average amount people were underinsured by was over $300,000. So it's a significant amount. Wildfires are a little different because they take down everything, including the foundation, but floods can do quite a bit of damage as well. So, and we just want to make sure that when we're talking about underinsurance, that 2/3 number is pretty significant. It's pretty significant. So, look to the person on your left and the person on your right, and only one of you has enough insurance. So we'll talk about how to do that insurance checkup with your agent, and then also resources that if you have a claim, we'll be able to help you. But that's just one of most of the other problems we see are claim problems, but it's that big one that's pretty difficult to solve. So when you're doing an insurance checkup, the most important thing we want you to do is to find your insurance policies. You might have one if you just have homeowners insurance, but you might have two if you have homeowners and flood insurance. And you want to review your declarations pages. That's the main page, and I have an example on the next slide. But they will have basically a summary of your coverages. And insurance has more or less four different buckets of coverage with different dollar amounts on them. And then they will also have additional pieces called endorsements or schedules, that they will also list your exclusions. That's when you're kind of getting into the fine print of it. And then it'll also list your deductibles. And that's a really important piece that I also want you to pay attention to when you're doing your home insurance checkup. So here is an example of a homeowner's insurance policy. So as you can see, and I think I can use my mouse too, you'll see the different buckets of coverage. So you have your dwelling coverage, which covers how much you have to rebuild your home. Other structures would be your garages, anything that's not attached to the house. Personal property is your contents, everything inside, and then loss of use is the amount you have that pays for rent in your temporary dwelling while your home is being replaced. So while you can no longer live there. And then these are down here are the endorsements. Now, right here, this policy says this policy does not provide flood insurance. This policy does not provide earthquake insurance. It's pretty clear right there on it that it'll tell you what it doesn't have. So that's an important piece to mention. And then this is another example of one. This one says loss of use. This is a homeowner's insurance policy. Loss of use up to 12 months will tell you the time limit you have, the dollar limit. Sometimes it's unlimited. But then it'll also have deductibles. And this policy has two separate deductibles for different types of damage, different perils, basically different what happens, right? So for wind and hail, there's a percentage deductible. And this is a really great policy because it has what that means. So that is 1% of your dwelling coverage right here. And then all other perils, so anything but wind and hail would be $1,000, a flat dollar amount. So your policy might have a separate deductible for wind and hail, or a named storm, or a hurricane. So it might say hurricane deductible with a percentage. It might say named storm with a percentage, and it might say other perils. So that's what you want to make sure you understand, because if you have your policy and it says hurricane deductible and that says 5%, that's a significant amount. That's a big percentage there. So take a look at your policy. Everyone's policy here may look a little different, but it's really important to understand those deductibles. And then what is a deductible? Maybe someone has that question, and it doesn't remember. There are no stupid questions with insurance because it's like a whole different language. So your deductible is the amount of damage that has to occur for your insurance policy to kick in. So for all other perils, say that a good example is, say you have I can think of a lot of examples where it's like, would this be covered or would it not? But the one that came to mind is, say you have a refrigerator leak, a pipe bursts in your refrigerator, and that is covered in your policy, and it does $2,000 worth of damage to your kitchen floor. You might have a deductible that's for $2,500. And in that case, it wouldn't necessarily be a good thing to file a claim, because you would have a claim on your file. You would have filed a claim, you have a claim on your record, but the damage did not exceed your deductible. And so you didn't actually get any money from your insurance policy. So that's a big thing. That's something to keep in mind. You will always file an insurance claim if someone is hurt in an incident or something like that. But really, you have to exceed your deductible to really get the benefit of your coverage. So what matters? And again, we're still talking about home insurance here. We're going to talk about flood insurance in just a second. But when we're talking about types of claims, home fires are still, you're more likely to have a home fire than damage from any natural disaster. So it's still really important to do this home insurance checkup with your homeowner's insurance. And if there are any renters tuning in, some of this applies to renters and some of it is homeowners only. So both homeowners and renters, we want you to know your deductibles and know what they are. Your loss of use or your additional living expense coverage, that's that coverage D amount. Do you have a dollar limit? Do you have a time limit, or both? We want you to know what matters there. After disasters, if you can get back home within 2 years, you have done fantastic. And that is saying something, right? Like, it takes a very, very long time to recover and rebuild your home and get back in there. So if you have a certain amount and you divide it by the for your loss of use, divide it by how many months of in your time limit, and that's how much you would have per month for, say, 2 years to get to rent a house. So to be a little bit more clear, you still have to pay your mortgage if something happens, but in your homeowner's insurance policy, you would be able to use your loss of use coverage to rent a place while they're fixing your home. Flood, this is, when we're talking about floods, it's important to know that flood insurance through the National Flood Insurance Program, which is the most common type of insurance, and we'll get into this a little bit more, they do not have this coverage in their policy. So if there is a storm and that you file both a home insurance claim, because say there's roof damage, and a flood insurance claim because there's flood damage, it's very, it's a struggle trying to convince your homeowner's insurance policy to cover your loss of use when the main reason you're out is that flood damage. So there's definitely a struggle there. But moving forward in your home policy, you want to make sure you have replacement cost over actual cash value, that you've scheduled your valuables. So think of anything in your home that it really matters to you, those, whether it's your, say, guitar collection, or maybe your photography equipment, or, just think about your home. If you have valuable things, likely there may be a sublimit within your policy that says we will only pay out up to $2,000 for jewelry. And if you have something that is worth more than that, if the combined value of your jewelry or your whatever your collection is more than that, and it's something that really means a lot to you, you might want to consider getting it scheduled. That's what it's called. It's scheduling your valuables, so that if something does happen, you would be able to get covered for that. And then exclusions in your policy, it matters what the exclusions are. Flood is a common exclusion. Earthquake is a common exclusion. Water damage and mold, there are very, those are gray areas. So read the fine print in your policy around those pieces to make sure what is covered and what is not. Some policies, they differ in the language, so it matters to read it and understand that you probably have options. And if it sounds like, ooh, I don't know, this sounds pretty specific and not in a good way, you can shop around and find a new home insurer if you need to. And then for homeowners only, making sure you have enough coverage A is really important. And then this is a big one too, your building code upgrades. If you have a significant damage or your home is destroyed, you do have to build it back up to code. And that's usually a separate dollar amount within your policy. So depending on how old your home is, you want to make sure you have enough to make those enhancements so that you can actually return home. And then also sewer and water backup endorsement. That's a big one. You want to make sure you have that one in your homeowner's policy. But then going back, getting that coverage A amount is really important because all of your other coverages are a percentage of that. So find out what the actual cost per square foot to rebuild your home would be. So one thing you can do is you can take your coverage A limits, your dwelling limits, and divide it by your square footage, and you can find out how much you would have in your current policy. And then talk to local builders, talk to your insurance agent when you're having that checkup and say, would this be enough to rebuild my home in the worst case scenario? And likely if it's, we rarely see people being able to get back home under 300 per square foot. And then again, this doesn't include your land value. It's just what it would cost to rebuild or replace your home. And then again, common exclusions in home policies are, flooding, earthquake, pollution, mold. You'll have a list in your policy of exclusions, and then you can always ask your insurance agent if you see something that you want covered, is there coverage I can add to fill this gap in my coverage? So now we're getting into flood insurance. So I think everyone knows now that flood is not included in your home policy. But if the water's coming from below, that is considered a flood. And, we're seeing more and more that it's important to make sure that you know what your flood risk is. You don't necessarily need to be in a flood zone to benefit from flood insurance. Between 2014 and 2018, over 40% of flood claims were outside of the high risk area. So if you're in a high risk area and you have a mortgage, you're likely required to have flood insurance. But if you're not, it's your choice. And we want you to make that choice with as much information that you can get. So you can go to the flood map service center, so you can see your flood map. And then there are a lot of newer ways that you can also check, check your flood risk. So one of them is called floodfactor.com. And out here in California, and I'm not sure how far east they've gotten, but your flood factor, which is just a number that they've assigned, and you can learn more about it there. It's now included on a lot of our real estate websites. So if you go to like Redfin, or I don't know if you guys have that, or it's like a Zillow, right? It'll show that number on your house. So you can see, like, not only do you have a flood risk, but do you have a future flood risk, right? So that's a new thing. So you can check, you can use the internet, you can try and find out more about, how much of a risk your specific home has. And then, ask yourself, like, if my home flooded, what would I do? Do I have enough insurance? Do I have insurance? Is that an option? Get a quote for flood insurance. You can get it through the National Flood Insurance Program, which is through FEMA. They do have a 30-day waiting period though. So like, you buy insurance today, it kicks in 30 days. So if there's an event that happens in between, then you wouldn't have coverage, which is why you gotta do your homework in advance, right? But there are also private flood insurers that also sell insurance. So get a quote, see what that would cost for your home. And then you can make a more educated decision on whether or not you need it. And I pulled up Union County here. This is and so just so that you could see that it's really specific, right? Like, so not every house has the same, the same risk. And so knowing the risk of your specific home is really important. It's an important thing. And then it's important that if you go with the National Flood Insurance Program, you understand that it is not meant to make you whole again, in the sense that your home insurance is, I must have some skips going on. So Congress created the National Flood Insurance Program after most private insurers left the flood insurance marketplace. So most of your name brand insurance companies won't sell insurance for floods. So the federal government said, okay, but we have to have some sort of insurance here if everyone's, if there's such a big flood risk. And so they created the National Flood Insurance Program. And your name brand insurance companies can write that insurance, meaning they can sell it to you, but it's still a National Flood Insurance Program policy. So it's still through FEMA. And then they recently changed some of the National Flood Insurance Program rating systems. So starting in April, there'll be a different, if you currently have flood insurance through the National Flood Insurance Program, your rates may be changing. So that's called the NFIP 2.0. They're calling it 2.0, which is they have a new rating system on what your risk is, and that will correlate to different rates. Other things to know about the National Flood Insurance Program: the top limit you can get for dwelling coverage is $250,000. So even if it would cost your home over $500,000 to build, the maximum amount you can get for your dwelling coverage through the National Flood Insurance Program, so the max amount you would be able to get if you had a flood would be $250,000. Similarly with contents, that's a separate policy that you have to add. So if you have flood insurance, because your mortgage company requires you to, you might not have contents coverage because that is an additional policy and your mortgage company wouldn't necessarily require you to insure your own contents. That being said, anything that's below grade level, so if it's not street level, would be excluded anyway. So if you have a basement, or if you just have 3 steps that you walk into your house and down, the contents on that floor would not be included. And then again, it doesn't include that additional living expense coverage. So if you have flood damage and you can't live in your home, you still have to pay your mortgage, and you'll also have to now come up with another place to live. So that's different about flood insurance. Okay, so with all this information that you've just gathered, we want you to have a conversation with your insurance agent, with the person who sold you your insurance, and take notes. You can do it over the phone. You don't, but we want you to make sure that you're documenting your conversation, and you're communicating your insurance goals. So if you say, I want to make sure that my home is covered if there's a fire or a flood. If there is, it can, help me make sure that my home is covered for flood damage. And they say, oh yeah, here you go. This will be enough for you to get back home. You want to follow up with an email. You want to make sure that you're telling your insurance, the professional you're paying to insure your home, what you want. And you're relying, if you're relying on them, check but verify. That's what we always say. So we want you to make sure there's a paper trail that you had this conversation, that you wanted to make sure that you are insured enough. And then also follow up if you have any unanswered questions. You might have some. You want to make sure that that you're understanding exactly what you have, and that they're taking the time to explain it, because like I said, it is complicated. And then you'll also, your insurance will come up for renewal every year, and it's important to let them know if you've made any remodels or repairs, or if someone moves into your home. So if you have a new boyfriend this year and they move into your home, if you're not married, their belongings wouldn't be covered under your home insurance policy. So updating them to add it, or just knowing that their stuff isn't, I don't know how serious you guys are, that just make sure that that this is part of it. So if there's someone else who moves into your home that's not directly related to you, it would be your choice whether or not to add them or not. But they're not automatically covered. And then if you get married or divorced, that's something you'd want to update your insurance. And then if you get or are thinking about getting a new dog, some policies also have exclusions for certain dog breeds, so that your dog wouldn't be covered. And then the questions to ask, the main one is, will your policy cover the cost of rebuilding or replacing your home? What are your options for flood insurance? How much would it cost? What are your current deductibles? That's an important thing that they explain it to you. How long your additional living expense coverage would be kick in. And then just what ifs, what are the scenarios? What kind of scenarios do you have in your mind that I didn't cover, but it's kind of the thing that keeps you up at night, right? Is that covered? And then, I'm well aware that we've spent a lot of time talking about potentially adding coverage to your homeowners insurance or adding another bill, right? So here's some tips to reduce your premium. So when you're shopping, ask for a quote with different levels of deductible. So when we're talking about a straight dollar amount, it's very easy to understand. So you would have, if you have $1,000 deductible, your annual cost will be more than if you have a higher deductible. So you could raise your deductible sometimes incrementally. So it doesn't have to go from 1 to 5,000. There's usually a couple levels in between there, but that small bit of a raise will make a big difference in your annual cost. And then also, if there are ways you can bundle your coverage, that's a common one that you hear. There are always a lot of commercials for. And then check out your clue reports. That is basically like your credit report, but instead of for your credit, it's for your claim history. And if you can get a free report there and then check if there are any errors on it. They're not always the easiest things to fix, but if you see an error, it might mean you have more claims on your claim reports, that the insurance companies would charge you more because you have a higher claim history. And then ask for discounts for hardening your home. So if you do something to make your home better able to withstand damage, maybe there's a discount there. And then I have a link down here for disastersafety.org. That's the Institute for Home and Business Safety. So they have steps for what you could do to protect your home from flooding or from hurricanes as well. So you'd be able to see that. And then finally, I just wanted to say that if you do have a claim, we are here for you. This is our bread and butter. What you would want to do is you want to make sure that you get a full copy of your policy, look for any deadlines, find out what your loss of use benefits would be and start using them. And then an important one is start a claim diary. Start writing down all the things that are happening, who you're talking to, what they're saying in regards to either timelines or dollar amounts, because it's really hard to remember everything in those times, and it's a long process going through an insurance claim. So you want to have this diary, get yourself set up for success, and then save all your receipts, because you'll be able to get reimbursed for a lot of that for your loss of use benefits. So any more meals that you have to eat out, your places you stay, things you're replacing, take lots of photos or have someone take photos of your damage. And then visit our website. We have tons of claim help resources. Oh, I said finally, but there's one more. And then if you do get dropped by your insurance company, we do have resources on our website as well at uphelp.org/dropped. Insurance policies are a one-year contract, a one-year relationship. You're buying it for 1 year. Typically, and unless it says different on your deck page, but it's usually, something you buy every year over and over and over again. But really, your insurance company is able to choose you as a customer every year or not choose you. So if you get dropped, don't panic. You'll just have to start shopping around. And shopping around is a good thing. You are welcome to do it at any time. And you might find that there is an insurance company that's willing to insure your home for more coverage for a lower price. And, as long as you're comparing apples to apples and you're doing that, that's great, because, I hope that you reach out to your insurance agent. But if you do that and you find that you learned more at the public library webinar than your insurance agent is able to tell you, it's probably a red flag. So, we just want to empower you as a consumer. You spend a lot of money on your insurance. So we just want to make sure you're buying what you need and that you have what you need and that you never have to use it, right? It's an odd thing. So thank you. So that is it. Our website's right there. And I just want to thank you for all of that time that you gave tonight to listen to about insurance. And thank you so much. And I hope that I can answer any of the questions you have. So thank you.
Yeah, Emily, let me just say, Emily, thank you so much. That was a fantastic and very clear outline. I think we really all do feel empowered now about, how we can better prepare ourselves. And it was actually really interesting. But for a talk about insurance,
Right?
that was really great. So yeah, anybody, if you have questions, feel free to speak up. You can turn your cameras on. You can type into the chat, whatever you'd like. And just remember this program, she did cover a lot of information, and it will be available for you to review on our website, within a day or two, on our YouTube channel. And I will send out the link to everybody, so you'll have that once that's available. So is there anybody with questions? Yeah. Well, I actually, I just wondered, I didn't quite understand what was meant regarding flood insurance and the below grade contents.
Yeah. So, yeah, that's a good question. So, if your home is, for lack of a better word, underground or a basement in any way. So if you walk in and there is a part of it where you have to go downstairs, or if you look out the window and the window's only, it starts up here, but any part of your home that is below ground, basically, so below flood level, think of it like that, easier for water to get in and flood. Those contents, so your personal property in that area is not covered under the National Flood Insurance Program policy.
Okay, well, that's definitely something to be aware of, sure.
Yeah.
Question in the chat: are there significant differences if you dwell in a multi-unit building?
Yeah. So the main piece there is the difference would be if you own it. So if you're part of a condo or a townhouse that multi-unit, you share a wall. You still want to do the same thing where you get a copy of the insurance policies, whether it's part of your HOA or something like that as well. That will help you put the pieces together, because sometimes your insurance in those situations are walls in, they just cover the walls in, and then there's a master policy for the actual building. And then also there's something called loss assessment coverage for HOAs. And so that's another piece that you want to make sure you have, because if if there's a gap in coverage, if there's a loss and then there's a gap of coverage, a bill can be assessed to each unit to cover that gap. And sometimes those can be pretty significant, but if you have this coverage, it will pay that bill. And it's usually, it's usually like a 5-figure bill. It's not a small bill that you would get. So loss assessment coverage is the main thing to add in.
Thank you. Anybody have any further questions? All right. I guess that's it. Again, I'd like to thank you so much, Emily, and thanks to United Policyholders for sharing this really valuable information for, unbiased information for consumers that can be really, hard to find. All right. And once again, I will send a link to the recording when it's available.
All right. Thank you so much.
All right. Thank you. All right. Good night, everybody. Take care.
Good night.